Greetings. Today is Friday, June 13th. We're going to take a look at GSK, IBM, and Cisco today and give an updated analysis. It should go without saying that this is not specific investment advice for you. I am doing this as a service to our clients. If you have questions, by all means, feel free to reach out. The summary that I would like to point out is that you need to do your own research and make your own conclusions and follow your own investment process. If you don't have an investment process, hire somebody who does. Before diving too deep, it's also very important to understand that this analysis should be framed for positions that are large. These clients have large positions in these stocks because they either work there for a long time and they just bought employee stock purchase plans and RSUs over the years, or they've got executive compensation awards, etc. But if you work for a publicly traded company, you could easily find yourself with an oversized position. And what's important to understand is how you handle that position while you're working is going to likely change once you've separated from service, either because you've moved on or because you have retired. So that is with that we're going to dive in. Whenever we're doing an analysis like this, we have to first frame it. So what's the overall, what's the big picture? What's the macro view? We're going to take a look at a couple of different things to get a big picture, and then we'll look at each individual stock. On the top pane is the S&P 500. The bottom pane is the advanced decline line. Here, what I want to point out is the advanced decline line is indeed in a positive trend. And while we see the S&P 500 has not yet made new highs, technically the advanced decline line has. That's bullish, so that is good news. If we also look underneath the surface and see what percentage of the S&P 500 is above their 50-day moving average, 50 days is approximately 2 months. So we have about 78% of the stocks in this index are in a short-term uptrend. We still have about 50% that are in a long-term downtrend. So this is a little bit different scenario, but it is definitely improving. So that, again, I would argue is good news. If we flip the screen now and look at IWV, IWV is a Russell 3000, and this is a little bit more concerning, which shows that the market has more work to do. And what I want you to notice here is you see a positive trend on IWV in terms of the fact that it's made a new recent high. Now today, the market is trading down a little bit, no doubt because of what's going on with Israel and Iran. But on the bottom pane, we've got on-balance volume, and this is a little bit of a concern. I would like to see these indicators in my bottom pane. I want to see these indicators confirm what I see in the top pane. So the fact that we have a positive trend here and a negative trend there, that is a little bit concerning. Overall, I like what I see. It just says that we have a little bit more work to do. It's also important to take a look at the seasonality. What happens in this season of a typical year? And this is where we're at. June is historically not the best month, but this month is certainly above average. But take a look at July. July tends to be pretty good. That doesn't guarantee anything, but it means the wind might very well be at our back. And in addition, we look at the presidential cycle as something we spend some time looking at. And history suggests that the back half of the first year of a president's term tends to be good. Now, that's not a guarantee, of course. And so when the market is selling off, even though we know that the history suggests the first year of a presidential term tends to be positive, we can't ignore the fact that the market is selling off because we never know for sure what's going to happen tomorrow. So now let's look at those individual stocks. GSK is up first, and first we're going to take a look at the weekly view, keeping in mind that this data is going all the way back to 1996 or so. That's the biggest concern that I have, is the longer term trend for GSK has been down. We're going to keep that red line on the screen, but zero in. This red line is that trend line that I just showed you, but we got to live in the current. We got to live in the present. So what's currently happening? Well, what I've shown here to this particular client is the fact that GSK was able to kind of form a little bit of a bottom here, and it started to rally. When I last gave this update for this particular client, I said this is a little bit of a moment of truth, this ceiling right here, and we were able to get through that. GSK rallied through that, and it has put in a new high here. And so what I would have expected to happen has kind of worked out. And again, I'm not trying to forecast. I'm just trying to say, what does the chart tell us? Do we see encouraging signs on the stock chart? And so right now I do. Again, the market has traded a little lower today so far. And you can see when I took the snapshot from this chart is about 10 o'clock in the morning. But overall, I like what I see here. In addition, if we do a price measure, I see a short-term positive trend. And again, this is for a client that's got a large position. So we're going to start exiting some of these positions over time because they no longer work for this firm. But what I see is approximately from today's price, about a 6% rally before we really have to face that longer-term trend line. So I would like to see us hold this position, again, for these longer-term clients, because I want to get up to that trend line. And if we can do that, that's when we might want to take some more of this off the table. Obviously, we still want to put a line in the sand. We believe very strongly in protecting the principal and protecting gains or whatever. So we'll have a stop level if it moves against us. If the current environment deteriorates, yeah, we'll have a line in the sand where we say we're out. We're not going to wait till it gets here. But I would like to see this rally up to the 6% to get to this long-term trend line and then start trimming it as hopefully GSK can start to work on getting through that negative trend line. Flipping the screen to IBM. IBM now on the screen all the way back into 1998. I've worked with a lot of IBMers over the years as well. And for the most part, it's always a little demoralizing looking at the company stock because, again, we see this negative trend. There's your trend line. But again, lately it has been able to break through that and it's gone on a fairly impressive rally. So if we zero into the current, we talked about this last year with the clients that it was looking like IBM is going to face this battle of resistance right here, and it did. It rallied through that. Right now, what I'm seeing is this level right in here. What is that? About 265, 268, somewhere in that price range. So are we going to give back? Is IBM going to come down a little bit because of the overall market? That is entirely possible. But I like this stock. I see some strength here, and so that could very well continue. Again, not telling you to go out and buy IBM, but what I am saying is if you have a large position in IBM and you need to trim it over time, we might want to wait on this as well. Remembering the backdrop is relatively encouraging. There are concerns, yes, but there is some reason to be a little bullish going out towards the end of the year. Again, same thing as always. We would have a line in the sand where we're going to say, hey, we're going to take some off the table at a certain level. And I would argue right under that rectangle that I've drawn, that might be where we would draw that line in the sand. Again, difference between a short-term trader and a longer-term holder, somebody who's got a lot of positions in IBM, and you just don't want one stock to get to be such a large position in your portfolio because individual stocks can change really, really quickly. And Cisco is a classic example. This example is in my upcoming book, Evidence-Based Investing. And so this is the point. Cisco was on a tear and then all of a sudden things started to fall apart. But that's the longer term view. Let's zero in and look at the short term view with Cisco. Again, you see this level here where I was obviously concerned when it broke down. But then when we look at it currently, this is what I see with Cisco. So the fact that it's rallied back through this level and come back in, if it can hold this, I would be relatively encouraged. When we have the background or that big picture view in mind, I would say if Cisco can hold that level, then I would be comfortable holding on for a little longer to see if we can't get a little bit more juice out of that lemon. So hope that helps. Again, some of these principles applied to all stocks. So if you have a large position in any particular stock, that's the type of analysis that we want to do to help us determine when we should trim a position. Obviously, if you have a financial planning need, like you're going to buy a vacation home or you've got kids' college coming up or something along those lines, that's going to factor into that decision as well. But I hope that helps. I'm not trying to predict anything. I'm just trying to tell you what I see when I look at those stock charts. If you have any questions, let us know.